up, let's go now to Chris Conway from the Australian Stock Report for more on the market performance today. Chris, we are heading lower again, off by about 0.9%. Most of the market in the red. I'm interested in the banks today because they're all off by about close to 1%. What do you make of those moves, given we've seen a couple of days of gains? What does that tell you for the trend in the banks going forward?
Good morning, guys. I actually think the trend in the bank or the risk is still to the upside. When I was on last week, I spoke about the yields in the banks becoming particularly attractive. Valuations have come back to reasonable levels. Today doesn't worry me too much. I think the banks will strengthen again, particularly heading into the end of the financial year. And I think they'll also provide a bit of a catalyst for the market, potentially to push up to 5,800, provided there's no really alarming outcomes regarding Greece.
Yeah, how does that square with the idea of Fed tightening towards the end of the year, though? The idea that a large insto component of the market might deem that market more attractive on those terms with those banks than ours?
Yeah, good point, Carson. I think what's happened, though, we've seen some evidence of it recently, is that the Aussie market has sort of decoupled from its global peers, and that's on the back of the 10% or net 10% sell-off we've seen. Australian investors have perceived that there's some value out there. You know, they all love the banks leading up to the sell-off. They've seen them off circa 20%, and they've moved back in. So yeah, no doubt rates lift off in the US could be a drag. But I think there's enough momentum in there to push the banks higher. Don't get me wrong, I don't think they rally hard back to their recent all-time highs, but I think there's still some value there, and I think for traders, being on the long side of the banks at the moment is probably the way to go.
Now, it's hard to ignore Woolworths today because obviously it was the big story yesterday, but today we're getting sort of the follow-through from brokers with a lot of downgrades coming in from the stock, and also Moody's downgrading its outlook as well for Woolies on its sales numbers. The stock off about 1.6%. Do you see a level where you might buy into this one again?
Actually, no, and good question. I don't see a level, and to be perfectly honest, I'm not really looking for one. I think it's still a sell. I don't think longer-term investors should be looking at it. I think if you're a short-term trader, you would be shorting it. Real problems for Woolworths, real problems for a lot of the grocer segment of the market. I heard an analyst this morning on your show talking about how, you know, potentially over the next 10 years, it could be a real struggle for the big boys, Coles and Woolworths, to maintain their margins as more and more competition comes online. Of course, we've got Lidl coming again from Germany, and you know, it's a really good proposition that they won't make as much money over the next 10 years as they have over the past 10 years.
Then again, Woolies owns the largest number of supermarkets in the country, and Lidl is but that. It's a little, right, by comparison. Yeah. So we're not comparing apples with apples.
No, we're certainly not, but one need only look at the impact that Aldi has already had. I believe recently that they've already gained an 11% market share on the East Coast, and we all know about their aggressive plans to expand over to the West. The big boys, Coles and Woolworths, have enjoyed it too good for too long, I think, and I think in a forecast where Australian consumers remain discerning, they're moving away from them because they perhaps feel as though they've been ripped off for far too long. So there is a shift in the consumer, and there's no doubt that competition is coming. I mean, it's already here, and it will come harder and faster, no doubt.
So are there any of those grocers that you'd be interested in, or are you out of the industry because of the competition that's sort of been heightened?
Yeah, no, we'd probably be out of that space from a long-term perspective. From a short-term perspective, we're sellers of Woolworths and Metcash as well. I think the pick in that space is Coles. Their advertising has performed well. They've managed to maintain their consumers' dedication, and whilst they've been in a price war with Woolworths, no doubt, they seem to be faring much better than their competitors. So that would be our pick if we had to pick one, but overall we're probably out of that space. We think there's better opportunities elsewhere.
Bigger picture as well, you know, we spend a lot of time on the channel talking about Greece and I mean what that means to people in your kind of investment orbit as well. Do you kind of also detect a bit of an irony? And one viewer's written in to say, look, an economy that arguably resonates a whole lot more for Australians, and that's the UK, the prospect of, you know, heaven forbid, leaving the euro, not that that's what the consensus is, but the kind of ripple effect that might have on confidence isn't nearly half as discussed. Where do you see the debate and the relevance of that debate for your investors?
Yeah, look, I must admit, Carson, I tend to agree with that sentiment. I think the furor surrounding Greece is a little bit overdone. It's a relatively small economy in the Eurozone. It's just a flashpoint, I think, and it's a talking point, and it might be the first one to leave the Eurozone, so there's always going to be plenty of headlines around it. I think in terms of the global economic impact, I think it would be not completely minimal, but fairly minimal. I think it will be dealt with one way or the other. And people will move on. I think people are already starting to get a little bit tired of it. I mean, these ongoing and protracted discussions where nothing's happening, markets have sort of said, well, that's going to be what it's going to be, and we're just going to keep doing what we're doing. So, yeah, in terms of the balance to the importance of the UK, yeah, totally. UK is a far more important market, far more important economy from a global perspective, and indeed in terms of Australia as well. So, interesting that it's not talked about, but again, you know, Greece being the first one, I think that's where all the headlines come from.
Chris, you say the market could get to 5,800 at some point soon. So where are you seeing the value going forward? Because I think that's the question from most investors. You know, do you see it in the banks, or is there a certain sector, or are you a real stock picker at the moment?
I certainly think it's a stock pickers market, and again, that's something that I've said in recent weeks when being on the show. But I think now is the time to release a little bit of risk back into the banks. They're a very compelling proposition, and barring some macro factors which derail global markets overall, as I said, I think the risk is to the upside. In terms of the big miners, I think there's still potentially some value there. I'm not too worried about this recent 7% move lower in the iron ore price. It's no more or less violent than the near 20% gain that we saw over a 4-week period. And I think iron ore was up 12% in May as well. So just some little supply-demand things going on there. So potentially still some value in the miners, and it's the big guys. It's the banks and the miners, but banks would probably be the preference right now.
And some of these mid-tier plays, because we're looking at even below that level, the likes of a Talisman. We were talking about a Discovery this morning, a tie-up with Sandfire. That stock hitting fresh highs yesterday, still on fire today. Are you minded in this environment to believe that a Discovery is something tangible? You would be wanting to go there or not?
Look, I must admit, Carson, I haven't paid very much attention to that story or that Discovery that you're speaking of. Yeah, I guess it really depends on the nature of the discovery. Unfortunately, I can't really comment any further than that. I apologise.
Or simply is the environment such now that the climate for lending on something like that, to take it and bring it to fruition, has too many questions around it. Putting it that way, are you still sort of sitting on the sidelines?
Yeah, no, look, putting it that way, again, to sort of fence it a little bit, I think, again, it definitely is about the quality of the discovery, the quality of the asset. Yep. There will always be money available for quality assets, and there will always be people willing to invest, regardless of the point in the cycle for any of these key commodities. So if it's as good as they think it is, then it's worth taking on the risk. Okay. If there's some question marks over it, well, obviously you avoid it.
Okay. All right, Chris, we will leave it there. Thank you so much for your company this morning. By though.